Did we lose Rob? Oh, there's
Looks
Rob.
like Rob's there. Can you guys hear me?
Hey, Matt.
Hey, Matt. Yes, can you hear us?
Absolutely.
Okay,
Will,
good
really
deal.
great to meet you.
All right, no problem. Thanks a lot, guys, for popping in and looks like I was able to kind of change the scene up a little bit, so it works pretty good.
We set the table for you, Matt.
Oh, wonderful. Well, excellent. Very excited. So my understanding is that we had some questions with regards to DSCR, or
Yeah, so
I didn't hear the initial.
yeah, actually DSCR. That's what I'm looking at going at. Trying to get the most information on, but I'm open to all the whatever we can get to in the time frame that we have.
Oh, perfect. All right, great. And then let me just make sure that I can share. I haven't used this particular. It does.
Platform.
Yep, allows me to share screen. Perfect.
Yep, there you go.
Let me go ahead and bring up our DSCR matrix so I can tell you a little bit about what we do.
Okay, great. I sure appreciate it.
Yeah. I've been really excited about this program. It's been very strong. What market do you normally do? All right, do you do most of your business in?
I try to. I'm a vet, so I try to specialize and take care of my VA people. But I've been doing a lot of commercial stuff lately, so which kind of falls into the DSR realm on the
Yeah.
investment side.
And what market
In
are you
Dallas Fort
in?
Worth.
Dallas
Dallas
Fort. Oh,
Fort Worth.
perfect. All right.
Yeah. So
Yeah, it just helps me just know a little bit so I can kind of talk through some of the things with regards to prepays and all that with regards to the DSCR. All right, I'm going to go ahead and share my screen, and we're going to talk about a couple different programs. We've developed some great specialty programs here specific to DSCR. Let me just go ahead and share this. Great. All right. Can you see my screen okay?
let's see here. Let me see. Matt, you just shared. Yeah. Let me add that to the scene. There it is. All
Ah,
right.
Beautiful.
Good.
Wow,
Okay.
I like
That's
this.
pretty cool.
Like
Yeah, I
this
love this
system a
program.
lot. Okay,
There you
so a couple main things to take into consideration, and I'll kind of do the 101 and move relatively quickly through that with regards to debt service coverage ratio. These are for investment properties only. There is no income or employment on the 1003 whatsoever. We do ask that you include the schedule of real estate, which I know can be a little bit challenging, especially for some of these career investors who have a number of properties. But the good news is like, even if we're going to do a whole bunch of debt service coverage loans for them, we only have to do it once and get that outlined. The qualifying is based on the subject property cash flow only. And so basically, whether it's a refi, in which case we would have a lease agreement, or a purchase where we can go based only just off the 1007, we order a 1007 on all appraisals to establish the debt service coverage ratio. And what that ratio is the rent
go.
to the ITIA or the PITIA if you're doing a fully amortized loan. So you understand, and is this basic stuff you already understand?
Yeah, so yeah, I do understand that. For
Okay, perfect.
time mortgage. Yes.
So then I'll move to kind of the two other stuff and what we do that's spectacular with regards to this. This product is called our Spark TPO DSCR product. And if you look at this matrix, we've broken it down into two very easy to understand categories. Does the property cash flow up here on top, or does it not cash flow down here on the bottom? One of the wonderful things about working with Kind Lending on debt service coverage ratio loans is they do not have to cash flow, and we do not have a floor rate for the cash flow. So, for instance, some of the other lenders will say we will never go below 1-to-1. Like, so we won't do any properties that do not cash flow. Other lenders say we won't go below 0.8-to-1. So, like we'll allow it to cash flow poorly, but not super poorly. We don't have any floor rate. It either cash flows, and within that we have two pricing tiers, and we'll do pricing in a second.
Okay.
We have two pricing tiers, whether it cash flows strongly or very strongly. And then under the it doesn't cash flow, we have just miss, which is in that 0.75 to 9.99 to 1 range, or no ratio, which is anything under 0.75 to 1.
Okay.
So
0.75.
to,
Okay.
as an originator, the most secure way to offer this product for your clients with a 700 plus credit score is to offer it with 25% down. Because as you can see here, it falls into both categories. What that means is, regardless on a purchase, for instance, well, on a purchase in this example, of what the cash flow comes in at based on the 1007, because that's really the only intangible for you at the point of origination, is what is the 1007 going to come back at? Again, with other lenders, they might they might say, if it doesn't come in well, they might say you have to bring more money to close to get it to cash flow, or you have to bring more money to close to get to a lower LTV. If you sell it with 25% down in each circumstance, we're going to do it no matter what. It's just going to come down to where the pricing falls. And then it would be the borrower's option on whether they wanted to put more money down to get it to fall into a better pricing tier, or et cetera. Does that make sense?
Yes.
So it's a true no ratio product, in the sense that if you come to me with a $1.5 million purchase, let's do 1.25, and it's 25% down, and that property, it's going to have a 1007 come back at $9,000 a month or something like that. And a lot of times the SFRs don't. In those circumstances, we're still going to be able to do it, and the borrower's not going to have to bring more money to close.
Okay.
And that is truly one of the great, safety features with regards to us. What we find in a lot of cases is you get a lot, the loan officers we work with get a ton of emails that are like, we do debt service coverage ratio loans with only 15% down. In the fine print, it says they have to cash flow at 1.3 to 1 or 1.4 to 1 or 1.5 to 1. And as someone who understands the product, how difficult that can be on, loan amounts over 150,000, especially in the rate environment we're in right now. And so we like to be incredibly straightforward from the beginning. And that's how we kind of handle all of our products here, is that we're definitely a lender that over time has really established ourselves as a leader in service, as a leader in being able to get loans through and close on time in a timely manner. And so the products that we've developed, much like you were talking about VA earlier as being kind of, an area that you've been really strong because you're a vet. With regards to that, we want you to have the same dependability in offering DSCR as you do in offering VA. And so in developing this and putting it together with 25% down, you can have that exact same confidence. Really, in that circumstance, the only reason that the loan doesn't happen would be the same reason that other loans don't happen. Somebody walks away from the table, there's something wrong with the property or whatever the circumstance.
Or usually the case, the credit is not what they said the credit is.
Yeah,
Yeah.
exactly.
Yeah.
Again, they're very, very simple loans. We can get them through very timely. And I think that's pretty much, universal. But again, it really just comes down to how long it takes to get the appraisal done. Because there's just not a whole lot of meat to these loans. Now, they are business purpose.
Right.
And that is something to understand, that kind lending only allows you to put prepayment penalties on business purpose loans. And the only business purpose loans we offer are our debt service coverage ratio loans.
Okay. Now, it says you said there's Spark DSR alternate dots. So I guess there's what's the alternate on your dots? I mean, no tax return, no W-2s. It's just
It's
or no
great
dots.
that you bring that up.
Okay.
I have no idea why they put alt doc next to it. It's just that it's not like a
Should be no
standard
doc,
or a full
right?
doc. It's
basically
all
no
done on
doc.
the debt service coverage ratio. So
Yeah.
DSCR loans are only done on subject property cash flow.
There you go.
But
Okay.
and I think what you're kind is, it's a big matrix, and we have, let's say, this product offering, which is Spark Credit for people with credit issues, and the main one. Sorry, it's blurring as it's going through, but Spark Prime Alt Doc is the one I'm looking for. I should.
No
They
problem.
put it in the middle of the thing, so there.
The
There we
one
go.
thing- the one
Spark
thing, too,
Prime Alt Doc. So
I was going to say the one thing is, too,
Go ahead.
on this is it's kind of the old school checklist of going down the list of, okay, what credit, what FICO are we looking at? What LTV to the transaction we're looking at? Okay, what else are the components, within the body of the borrower that we need to take in consideration: housing history, any type of events, as in BK foreclosure, derogatory type stuff, and from there, then it comes down to the property.
Right.
And if everything checks out, the first one of these that I've done, and Matt helped me out quite a bit. It came out, what, Matt? 24 hours. We were ready to rock and roll and just looking for some conditions.
Oh, really?
And the
Yeah,
other one,
I mean, the underwriting is so fast on these things. There's just not a whole lot to them in the DSCR product in general. And that particular one that we offered, and again, I'll get into pricing. I kind of want to stick to the that's not what I wanted to do. I kind of want to stick to the DSCR stuff today, like for the first part of this. And then maybe what we would do is schedule another time where we can come in and really talk in detail about the bank statement, some of the other alt doc products.
Okay.
But we have one other product that I do want to point out, and this was a big deal because it was the loan that Rob actually brought in, is that it was a no prepay product. And that was in our Super Spark DSCR. We call that our low prepay series, and that we have nice options in these circumstances for borrowers with 30% down. Again, talking about the same dependability factor with a 680 plus credit score under 1.15 to 1. Again, we can do this if they cash flow strongly, but we know it's difficult to do. So this is the security product that I always point to on the Super Spark DSCR. And this is the best product that we offer for no prepay or a 1-year prepay. And what we kind of say with that is, to get access to those great rates, you put 30% down instead of 25. But the other products, and we'll run through pricing here in a second, are all sort of set around the concept of having a 3-year prepayment penalty. And so we priced most aggressively in that 3-year prepay term. But like I said, if they want to kind of buy out of that, they can go with the Super Spark, and that makes it a little easier.
Okay. So Rob mentioned something about with the credit report. If somebody has a hiccup, maybe a BK that's been discharged. What kind of time frame are you looking for that to have been either dismissed?
So
or
for all of
discharged?
our debt service coverage ratio products, we are looking for a 4-year clean period.
4-year clean. Okay.
But we do have options in, for if they were going to go bank statements or they were going to go full doc, as soon as 1 year out of BK or 1 year out of foreclosure, for owner occupied specifically purchases, within our Spark credit product. So if you've got someone who's 12 months out of a BK and they want to do a purchase or whatever, we do have some options for that, but they do need to go full doc. Or we do have some bank statement options there too, but it can get a little bit challenging to fit into that goal. So into that bucket. So we do the DSCR products in general are 48 months from a major credit situation.
Okay.
So all of them allow 1 times 30, and that's another thing that Rob and I were working on. And we should update Rob. We're great on that file.
1 times 30 and 12.
In 12, yes.
Okay. Okay.
And that was another loan that Rob and I were working on that it just sort of popped up when we were doing the BOM, but we're going to be just fine there, Rob.
we are going to be fine.
Now I know you say you're about to get into the interest and whatnot on briefly, but just real quick, are there any penalties for, let's say, first-time landlords?
So yeah, we do allow first-time investors, but we do not allow first-time homeowners. Okay.
Oh, of course.
And that's kind of you're going to find that relatively universal on the debt service coverage loans, because what happened was it's kind of the one way in which we can keep people from falling into an issue with regards to the occupancy. I'm buying, I live at home with my parents and I want to be the next, I want to own a ton of properties down the line, and I am free and clear, and I'm going to buy the house down the street. Well, in most cases, those guys are trying to, put a situation together where they don't have to qualify for an owner occ. And so the easiest thing that we do and put in place with regards to that is to say they need to own, it can be free and clear. It can be, the mortgage, they could have bought it a year ago, but they need to own their primary to go ahead and start amassing, that empire of investment properties.
Okay, so you're good with 12 months primary history versus normally I see 24.
Yeah, no, I'm fine with that. I mean, in fact, if we just show that they have
Okay.
a mortgage on an owner-occupied property, then I can move forward with the debt service coverage ratio loans.
Okay.
The main thing is to eliminate that question about whether they're going to live in the property or not. So,
Right.
And that, again, them having their own property and establishing on that, especially in our Spark DSCR product is fine. I do think that Super Spark likes to see 12 months in the property of paying, 12-month mortgage history. And again, the only point would be in what you were asking, if we get into the minutia on it, is I would need 12 months or 12-month housing history, but like 6 months could be on a mortgage and 6 months could be a VOR or bank statements showing that they were paying rent until they bought their owner occupied. It doesn't generally happen very often that someone buys an owner occupied and then within the next 6 months buys an investment property. But if that's the case, we can work with that.
Okay.
Again, because it's in place to just to sort of dissuade. But so the first time investor thing, let me just go ahead and pull back to that
Right.
other matrix really quick.
Good deal. And if you can zoom in, if possible, a little bit on your
Oh, sure. I'm
on your
sorry.
square, in your share.
So as we go down, sorry, back to the matrix with regards to the product here. 1 second. Sorry.
No problem. Because I what I do is I download it from the portal later.
Okay,
So
that's right.
whenever I do share this video, and I just
Yeah,
post
I was
it
just
there.
going to say with regards to first-time investors right here, a borrower that does not meet the experienced investor criteria, first-time investors must have owned a property for 12 months. So there's that element of it.
Mm-hmm.
Anytime during the past 36 months, and then this restriction, and then they're restricted to a 75%, which is exactly what we were talking about offering anyway.
Okay.
So there are a few other little elements here on the first-time investor, but that being said, is it will not stop them as long as they have their own owner-occupied property for 12 months in that circumstance. If they're buying their first investment property.
Okay.
Make sense?
Makes sense.
Yeah, and a lot of this stuff, as I said, we kind of outline on this. Unleased properties, just as you see it pop up, we expect all purchases to be unleased, okay? And there would be a circumstance in some cases where they're buying a renter, and we definitely want to know about that, like if the lease is part of the purchase transaction. As those come to the table, bring that, and we can kind of talk through that situation. But the unleased properties is an option for properties, again, that don't have an active lease in place on them. Like, they had somebody and they moved out or whatever the thing is. It's just a 5% LTV restriction in that case. They do not have to have a current renter in to do these loans, if they've been using it in the past for rental, if that makes sense.
Hey,
Okay.
Matt,
Good deal.
question on that for you, Matt. What proof are we needing if there is that type of purchase? Do we need proof of a lease currently in place that's being transferred as part of the PA, or do we need to have a transferable security deposit?
In that you would just need a copy of the lease, which you would upload when you order the 1007. The negative with them buying a renter is the best case scenario for our ratio that we were talking about in our pricing is whatever the current lease is on the property. Whereas if they were doing it without a lease going attached to it, we would go based on the 1007, which may be higher than the lease that's currently in place.
Okay. Hey, real quick.
Does that make sense, Rob?
Yes, sir.
I was going to ask, hey, real quick, Matt, I have a few inquiries about this program, and a lot of investors are asking if they can actually close in their LLCs.
Absolutely. Because they're business purpose loans. I do not, Kind Lending does not have the opportunity to do it in an S Corp or a C Corp, but in an LLC, we absolutely can. We have one limitation, and it has to do with the technology, in that we need to have all borrowers in the LLC on the loan,
Okay.
and we can't have more than two owners of the LLC because of our system limitations.
Okay.
But we
So,
certainly can close in an LLC, and in most cases, the LLCs that we run into for residential properties tend to be husband and wife, or two partners, or just one person that's doing it in the LLC, which is good. I mean, that's pretty much what you see 70% of the time. Then the other 30, it's like 8 partners, and in those
Mhm.
circumstances, we can kind of talk through it. with regards to what the operating agreement is and that type of thing, and if one or two people can sign in that circumstance. But for the most part, we're limited to LLCs of 2 or less.
Okay. So with that being said, well, just the second part to that question is, as far as the loan itself showing up on the credit report, is this going to show up on the individual credit report or the business credit?
Great question. And yes, it shows up on the individual credit report. They all want to be able to put it into a Chapter 11, and unfortunately, we make them personally guarantee the loan, and that's
Okay.
pretty much universal.
Personal guarantee. Okay, got you.
Yeah, and that's pretty much universal on all DSCR products with all lenders.
Got you.
There has to be a personal guarantor, meaning it's going to show up on the personal credit.
Okay.
I'm going to go ahead and jump into the pricing real quick, just so you can kind of see what it looks like. Because there's so many different options on what things, our pricing can get a little bit complicated at times. So I do like to show that when talking about the DSCR specifically as we go into this. You see if it's still got me logged in. Perfect. I was just doing one of these. Okay, so anytime that you're using our non-QM products, or what we call our Spark products, you would choose non-QM and fixed. We do not offer any ARM products because pricing on ARM products, as you'll pretty much find anywhere, isn't any better. But if it starts getting super aggressive out there and people want 5-year ARMs, we'll certainly release them at that point. Like if investors want them and they're willing to pay more for them. But right now they pay less for ARMs than they do for fixed, so we kind of just stick with that. Gotcha. So $400,000 purchase price. We'll go ahead and do a 722 credit score. Just go ahead and do the LTV. In this case, we'll do a 75% because we'll do a purchase. And then the main thing, and this is what I miss every single time, is the investment property over here, detached. We can go all the way from 1 to 4 units. There are lenders out there that go 5 to 8 units. It's important to understand, if you're going to be doing those type of properties, how long it takes to get them done. We cut ourselves off at 4 units. Due strict simply to the fact that 5 to 8 units are true commercial deals, and they generally take 75 to 90 days. Right. And we really don't want the reputation out there of being a lender that takes 75 to 90 days to close a loan. And so we limited it to 1 to 4 unit. I'll just go ahead and put this in. And then under documentation type, always alt doc. And then under income type, we go ahead and do it under investor debt service coverage ratio.
Okay.
Purchase. 80% of the loans in non-QM lending are done borrower paid, and they usually just charge in the front. Remember that, again, with it being more of a commercial type transaction like you're talking about, that's basically how all commercial lending is done, is with points on the front. And so we do have lender paid options, and you can use them, but we've found in a lot of cases it's very difficult to get those to balance at par. So we always go ahead and show the borrower paid pricing. 30-day lock. They can waive impounds, not a problem. There's no hit for waiving impounds. The LTV has to be 80% or less on all of our non-QM products to do that. But in this case, we'll go ahead and leave them on. And in many cases, we would put self-employed in there or whatever. So we go ahead and click on Show Me the Rates. And I'll warn you at first, there's a lot of information that comes up with regards to the DSCR rates in these circumstances, but hopefully in going through this together, we can make it very understandable in terms of all of these crazy things that we're looking at.
Yeah, Rob just updated my credentials, so I'm gonna go in later on tonight and kind of play with it.
Cool. So I'll tell you what you're looking at then when you're going through. It all comes down, as we said, we have 4 basic pricing tiers and 2 products. We have the products are Spark DSCR and Super Spark DSCR. And the pricing tiers are, again, greater than 1.25 to 1, which is always going to be your best pricing if the property cash flows really well. Very difficult to know that, especially in the case of a purchase. When I quote out purchases on the 30-year fixed product, I quote out this 1 to 1.24. And again, always take a look over here before taking it straight off of it from that standpoint, because there may be, depending on what kind of mood Rob's in or Ken's in that circumstance, there may be the opportunity to get it all the way down to a 7.99 with a very minimal cost in that circumstance.
Okay.
I never take the change out of my boss's pocket. I always just defer to Ken.
Exactly. Well, I think Ken's going to be okay at 8% and may even be okay at 7.99. Who knows, though, in this circumstance? It's, depends on the day. But that being said again, this was a good area to be offering up and to get them into the sevens on these products. So you'll see two things. So we've got the 30-year fixed and the 30-year fixed interest only. Okay. For the Spark DSCR, the nice thing about the interest only is we qualify on the interest only payment, which shows up right here.
Oh wow. So
So
so they don't have to qualify for on the full amortized amount.
that's right.
Wow.
For our Spark DSCR product, it's ITIA versus PITIA.
Okay. Write that down.
Yeah,
Got it.
well, in some cases, it can make a difference if that $200 is what's keeping you out of the tier for pricing.
Yeah.
Then being able to add that back in, can be very helpful. And a lot of times, I mean, when you're talking about $400,000, $500,000 loan amounts, does it cash flow, doesn't it cash flow? It can come down to, literally $100 one way or the other. And so it kind of starts with those, and then we get into the Super Spark. Super Spark, interestingly enough, you should think of it as basically just a 30-year fixed product. It doesn't qualify on the interest only. So Spark DSCR does. Super Spark does not. But again, if you're doing the Super Spark, and in this case, it doesn't go to 75%. So that's why we're not being given the options. But here's the pricing. Like if it doesn't cash flow, it comes into this 0.75 to 1 tier, and then below 0.75 to 1 is down here. So again, if you chose to do so, I mean, what a lot of times people say was, it's probably going to cash flow, and this is where the thing. But if for some reason that 1007 comes back, worst case scenario, you're looking at pricing, on the 30-year fixed down here in the Spark DSCR product.
Okay.
We also have a variety of different 40-year fixed terms. 40-year terms. We offer a 40-year fixed that sometimes people really like to spread that out and pay a little additional principal every month. I'm a big advocate of the interest only loans for these investment properties, because it allows, especially if there's a prepay, and how the prepayment penalty works. That's another thing that you probably want to understand. Is it's 5% based on the original loan amount for, let's say it's 3 years for the 36 months. However, if you put them in an interest-only loan, and let me bring up something really quick here just to kind of show you, just because I really like the interest-only for these.
So
investor
is it
products.
set? Is it set at 5%, or does it decrease every year?
Ours is very, very cut and dry. We have
Okay.
one prepayment option, and it's set at 5% for the 3 year or whatever the period is of the prepay.
Okay.
Does that make sense?
Yeah, it does.
So, but one of the things that I do like to point out is if they, let's say it's somebody that buys and sells a lot of properties, and they start out with us and they do the $500,000 loan at the 7.875, and they do it on this 40-year fixed. Can you see this okay, or do I need to zoom in a little bit?
No, I can see it okay.
They do that. Now, there is one thing that we did when we decided on this one prepayment option. Was the key component for us was there any penalty on an interest-only situation for paying the loan down? Because somebody might be much more willing to go with a 3-year prepay if they know that in a year when they sell their other investment property and they want to apply some of that either through a 1031 exchange or otherwise, that they can immediately take advantage of this and in fact pay it all the way down to like 10,000 and ride that out for the prepayment term, basically assuring themselves of almost no payment. Does that make sense?
Yeah, so you will allow that. Okay.
And so and many of the other prepayment penalties that are out there in the market limit you to 20% pay down a year on an interest only loan, but we do not. And so the thing that's nice with this, and and I'll send you a copy of this, it's very, I mean, you can take this logo out and put your logo in or whatever with regards to that. But it's a great way to illustrate the power of simple interest to these investors, because a 40-year interest only has a 10-year interest only term. The 30-year fixed interest only has a 10-year interest only term. Both of them have 120 recasts, if you want to look at it that way, in that even if they put as much as $50 of optional principal, they take advantage of that immediately with a lower minimum monthly payment the next month. Anything that they optionally choose to pay works to their advantage right off the bat. And so if they do this with an amount like this and they're getting a consistent rent every month, and let's say they're always putting the rent toward the mortgage, then that much more will go towards principal that much faster. And so again, it allows them to control their loan and control their business loan like this, much like they might control their business, apply principal when they want to apply it, make the minimum monthly payment when that's convenient for them as well.
Nice. Okay.
Yeah,
And
Will,
then-
the feedback I've gotten on this particular interest-only product is the feedback directly from property investors is that if they want to leverage better cash flow in a situation, they can do it instantly with being able to just throw money at it, bring that interest-only payment down. So that's the feedback that I have had directly given to me.
And the other element is, as being, truly the loan consultant with regards to this, is you can say, all right, well, what do you want your payment to be when it goes to the fixed part of the loan? Because remember, the rate never changes. The only thing, that changes is the term with regards to this. So the first 10 years, they have 120 optional payments. And then again, if they're like, well, what I'd really like to do is, at the 10-year mark, I'll be retiring. I'd like to get that payment, down to $1,500 a month or something like that. So I can be making $1,000 a month or whatever. So then you can show them just how much additional that they have to pay over the first part of the loan for the first 10 years to get it where they want it to be at that time. So in this case, it would be the 100,000, I think, that we put up top. And then they would need to pay 300,000 down to get the balance so that they're under 1,500 a month with regards to that.
Nice.
So it's just a nice tool.
Yeah, I definitely need that spreadsheet.
I will
Definitely
shoot
need that
that over to you. So what other questions do you have with regards to debt service coverage ratio loans?
I mean, you kind of went all the way through the gamut, You took it from the cradle, to the grave. So I don't have a lot of questions on it at this time. You showed me the interest. There's not a lot to the documents needed, the paperwork, because it's based on the property. I got a general idea on, where we need to be at as far as credit. I mean, the basic questions are answered. So
The last thing that I'll point out with these loans is they do take the lowest mid score of all borrowers. So sometimes what you'll do in those circumstances is you may leave a borrower off, but put them on title or do whatever you want to do later. Like if it's a husband and wife team that are going to buy the property together, and one has a 760 and one has a 680. A lot of times they'll just do the purchase in the 760 name. But the interesting thing about the rest of non-QM, and I'd love to set up another meeting with you to kind of go through. What I found is if we do it in like some 30-minute increments, it's a lot easier, and the things don't kind of flow together if you're available to do that. But
yes.
on the rest of the non-QM products, it's primary earners middle credit score. So that's also something that's sort of interesting with regards to the space. But this particular product, it's lowest middle score, like we're used to.
Okay. No, for this one, no, I don't have any more questions. And I definitely pull up my calendar and see can we get the other product scheduled and do another 30 minutes.
Yeah, that'd be great. Let me pull up mine too. I will.
You're still sharing, just so you know.
I saw that. You don't want to see all my other meetings, do you? So next week, I'm in really good shape. Are you around after the holiday?
Yeah, I'm available.
Awesome. What you want to set something up potentially for like 1 o'clock on that Tuesday?
Okay, so yeah, that should be available then. About 1 p.m. I'm in Central Time, so.
Yep, it's 11 o'clock my time. I'm putting it on my calendar right now. And what we'll do is we'll get into some really nice detail on how bank statement loans work and the alt doc types that are available with regards to the market.
Okay, could definitely.
And then, did you set this particular meeting up? Like, how did we get on this system?
This is my new tool that I discovered, and I'm loving it.
I love it. It's great.
Yeah, I'm
if
loving
you
it,
want to
man.
go ahead and shoot that back over to me and Rob, and we probably don't need Ken on that one, although Ken does love to soak in the information with regards to the non-QM stuff.
Okay.
And
Yeah, I set it up, and it's
that's great.
actually and here's the thing: the way this is set up, so the session, the link that you have is going to work every time.
Oh, great.
So I don't have to see your new link. It's just a
Perfect.
matter of dialing in, clicking in at the time that we're ready.
All right, I will cut and paste the last one. I'll put it in my schedule, and I will plan on. Have a wonderful holiday weekend. If anything comes up in the meantime, though, any other questions, you wake up in the middle of the night and whatever, just reach out. Rob's there. He'll come to me if he needs me. And anything that you need in those circumstances, I'm totally available.
Oh, thank you guys. I sure appreciate your time, man.
Anytime,
All right, look
Will.
forward
If
to
you need
talking to you next
anything
week.
else, yeah, let us know.
All right. Thanks, Rob. Thanks, Ken. Look like we lost Ken in the connection somewhere, but
Yeah. Ken gets bored. He jumps off, jumps on. But
okay.
anyway, we'll see you next week.
He
All
had a
right.
hard stop, but yeah,
See
we'll
you
see you
guys
next
next
Thanks,
week.
week.
guys.
Appreciate it.